Hey, what's up, guys? Welcome back, Wealth Builders, to another Wealth Builder Financial Community live stream. I appreciate y'all for joining me. Hopefully, you guys are off to a wonderful, fantastic start to a wealth transfer month. I must say, I'm off to a really, really good start. January has been really, really good to me. Both my long strategy and my short strategy both are doing extremely well, and I couldn't be happier. Here's the situation though. It's just beginning. But many people are not ready for what's coming. And I want to spend a few minutes to talk with you guys about that before I get to your questions. Many people are not ready for what's coming. And some of y'all might be saying, well, Richard, what's coming? Wealth is coming. A bunch of it. A bunch of wealth is coming. And a lot of people are not prepared, are not ready for it. They're just not. And guess what's going to happen? It's going to pass them right on by, just like it passed them by in 2024. Do you know how much wealth was transferred in 2024 and how many people missed it? I would say most Americans missed it. Didn't even realize what was happening. And I think you're going to see a repeat of 2024 and 2025, where most Americans are not even ready for what's coming, for what's here. It's a wealth transfer year two. I told you guys over the next 10 years, there's going to be so much wealth in this country, in other countries, because I know I got people that are outside of the United States that actually invest in U.S. companies, invest in U.S. ETFs that are basically companies, groups of companies. So I can invest in individual companies or I can invest in groups of companies. ETFs, index funds, mutual funds are groups of companies. Individual stocks, that's one company, right? But nevertheless, however you choose to invest, wealth is here. But wealth don't got no name on it. You got to attach your name to that wealth. How do you attach your name to this wealth? By disciplining yourself, by being consistent, and being patient. And taking this money that you're earning, whether it be from your business, whether it be from a W-2, whether it be from a side hustle, doesn't matter. You got to take that money and put your name on this wealth. And you put your name on the wealth by taking this money and investing it into big boy blue chip assets. Number one asset in the world. What is that? What's the number one asset class in the world? That would be paper assets in the United States stock market. The number one asset class in the world, $55 trillion worth of value in the United States stock market. Number two, real estate is number two at $52 trillion. You got American companies will do 27 trillion in revenue. So companies are third, real estate is second, paper assets is numero uno, number one. So what should you be doing in order to put your name on this wealth? Wealth don't got no color. Wealth don't got no age bracket. Wealth ain't got no female, male, whatever you want to call yourself. Wealth ain't got none of that. Wealth don't care nothing about any of that. All wealth cares about is one thing: discipline, consistency, patience. That's all wealth cares about. If you do these three things connected with your income, because that's your number one tool to build wealth, right? Number one tool to build wealth is your income, people. So if you're not happy with your income, guess what? If you want to put your name on some wealth, guess what you got to do if you ain't happy with your income? Get it up. All I got is $100 a month, Richard, but that's a start. And take that $100 a month, but level up. Set some goals for yourself. First 3 months of the year, I'm gonna take $100 a month and I'm gonna invest it and put my name on some wealth. But here's my goal. In month 4, I wanna double it. I wanna go to $200 a month. In month 6, I wanna go to $300. In month 9, I wanna go to $400. In month 12, I wanna have myself up between $500 to $1,000 a month that I'm investing. And I wanna do that every month, every year, every decade, until I get to the pot of gold at the end of the rainbow. But here's the cold, hard truth. A lot of y'all ain't gonna do that. A lot of people ain't gonna do it. They're not gonna wanna do it. But sometimes in life, we gotta do things we don't wanna do, guys, if we want some reward. So this whole notion of I gotta wanna do something in order for me to be good at it, I gotta like it, that's crap. In my opinion, that's bogus. I've done some things in banking that I didn't like, but I did it anyways because I needed the income. Because I knew if I could take that income and discipline myself with that income, be consistent with that income, be patient with that income, put it into big boy blue chip real estate, paper assets, I knew at some point I could take back my time. I could have more choices in my life, right? I could have all the freedom I want. We all should want that. Guys, this is not about millions and millions of dollars. A lot of people get confused with wealth. Wealth is about freedom, choices, and time. That's what wealth is about. Wealth is not necessarily about things. Don't get me wrong, if you're wealthy and you want to go get you some things, then you can do that. But wealth is really about the 3 things that I just said: time, choices, freedom. If you don't have enough of that in your life right now, you need to make a commitment to yourself tonight that you're going to change that. And through this simple program that I've been diligently working for 30 years, I think it'll work for you. Now, you ain't got to do it for 30 years. I've been on this journey. I've been on my chasing that pot of gold at the end of the rainbow journey for 30 years, but I'm okay with that. I'm okay with that. Why? Because I love the journey, right? See, it's not about the destination, it's about the journey. And I love the journey. I know the destination will be obtained. I already know that. Why do I know that? Because I've already put in the foundation. See, number one, I know what my destination is. See, a lot of people don't even know what their destination is. They don't even know. You ask them, well, okay, what does financial freedom mean to you? Be specific. Tell me what financial freedom means to you. What does your lifestyle look like if you ain't got to go to work tomorrow and you got enough assets to take care of you? What does it look like? What would you do? Who would you spend time with? This is what wealth is about, guys. It's not about the new cars, the big houses, the designer clothes, the luxury watches. Don't get me wrong. Ain't nothing wrong with getting those things if that's what you want and you done built your wealth and your wealth pays for it. Great. But really, it's about what I just said: time, freedom, choices. To do the things that you really want to do that don't got nothing to do with money, but it brings personal enjoyment to your life. It's your passion. It's your purpose. A lot of people never reach their full potential because they're too busy working for somebody else to help them reach their full potential. They sacrifice their full potential. So many of us sacrifice our full potential to help somebody else achieve their full potential. That's what we do in America. 85% of us work for somebody. And guess what? When you're working for somebody, whether you like it or not, I don't care how kind they are to you, Don't care. If you're working for somebody else, you are helping them 8, 10, 12, 15 hours a day reach their pot of gold at the end of the rainbow. You're helping them reach their full financial potential. But yet and still, you won't help yourself. No 401k, no Roth IRA, no taxable brokerage accounts, no emergency fund, credit card debt, other consumer debt. These are what the statistics tell us that is happening in our country. And I know a lot of y'all gonna say, well, how can that be? They say we're in a great economy. I done told y'all this, and I'm gonna tell you again. I told you many times in 2024, so I might as well tell you in 2025 and break the news to you. You got two economies. You got a boom economy and a bust economy. The boom economy is for those people that got wealth. Got the wealth thing figured out. They participate in the boom economy. For those of us that ain't got the wealth thing figured out, we're down here in this bust economy. That's why during the presidential election, when people were asked what's the number one thing they're concerned about, they said the economy. Why do you think people said that? Because they're living down here in this bust economy, not the boom economy. Two economies, guys. Please don't get fooled and tricked. You got two economies in the United States. One for the people that know how to build wealth and use wealth to pay for their lifestyles. That's the boom economy. People down here that work every day, check to check, credit card debt, car loan debt, student loan debt, tote the loan debt, payday loan debt, bust economy. Why else would that be the number one concern during the election? What, 150, 170 million people voted, something like that? The majority of those people said the number one thing on their book was the economy. And the reason they said that and why people are worried about the economy, because they understand that their dollar that they're making at their job is increasing slower than the goods and services they got to spend that dollar on. Go look at the statistics from 2019. Just go look at the statistics from 2019. Income did not outpace cost of your goods and services, didn't outpace it. But more importantly, it didn't outpace what? The stock market either. From 2019 to 2024, you had an 89% return in the S&P 500. Come on, guys. Somebody got to be listening to me in this thing. Somebody got to be listening. From 2019 to 2024, you had an 89% return in the S&P 500 index. So if you were tracking that thing with your ETFs, you sitting pretty right now. Here's the good news. It's going to even do better over the next 5 years. Why is it going to do better, Richard? Because that's the whole point of the stock market, is to go higher, guys. It's not to go lower and stay lower. Yeah, it'll have a correction. It'll have a slight pullback. It's healthy. But the whole point of this thing, guys, the whole point of the stock market is to go higher. It's going to always go higher, guys. Now, if something catastrophic happens, war, things that the common person, it's out of our control, then yeah, stock market will take a pause. But if America is still here, functioning as its own independent nation, stock market will come back. So for us, over the next 5 years, the next 10 years, what we should be doing is doing what? Preparing. Get ready. Don't sleep on this thing. No one's going to knock on your door and hand you a check for $1 million, guys. Just want to let you know that. Let's debunk that myth. Publishers Clearinghouse ain't finna knock on your door with a big old gigantic check and some dude with some cameras. 99.99999% of us will not get that call, will not get that doorbell ring. Guess what? 99.99999% of us also will not win the lottery. Now, here it is. 88% of us won't inherit one dime from nobody. 88% of us will not inherit any money from nobody that's mom, dad, cousin Pookie, distant cousin down the line, your next door neighbor who you looked at. 88% of us won't get no inheritance. Won't win the lottery. No publisher's clearinghouse check. No inheritance. Then it's up to you to just get out there the old-fashioned way, take your income and invest it, and do it every month. I don't care if the stock market is up, down, or sideways. Do it every month, every year, every decade, until you get to where you need to get to. History tells us if you discipline yourself, be consistent, and be patient with that income, you can build wealth. You can build wealth. Look at what's happening right now. Look at what's happening right now in the stock market. We get out on January 2nd, January 3rd to a good start. We come into January 6th, a week ago, one of the best days on history for the stock market in January. That Tuesday falls through. We see things start to slow down, right? Things start to slow down. That Wednesday hits, which was January 8th. Things slow down even more because some data came out about the economy, showing that the economy was strong. So therefore, investors said, well, goodness gracious, we got this good data about the economy. We got this good data. Now the Fed really has no reason to reduce rates. So what do? They start selling out. Some people were taking profits in January. Let's not get it twisted. There was some profit taking from 2024. People delayed taking profits and they took them in January. Maybe they didn't want the capital gain to hit them in 24. They figured, let me get the capital gain in 25. That way I got a whole year before I got to pay it. I ain't got to worry about paying it in April because I ain't going to take it in. I'm going to take it in 25 and I can just wait. Pay it in April of 26. So a lot of people took profits in January. Remember last year now. This is why I tell you guys, we got to figure out what's going on here. Think about last year. What happened last year in the first week of January? Basically, first few days of January. Market sold off. Had a monster 23. People delayed taking profits till 24, January 24. That first week or so, market was down. Market was down. But then what happened? We got on the back half of January, that thing exploded. If you look at what happened with NVIDIA from January of 24 to around April of 24, monster numbers. All I'm telling you guys is the whole point of the stock market is to make money, guys. So this notion that y'all are hearing from people, oh, 25 is going to be horrible. S&P 500 is going to be 3%. Guys, I ain't got no crystal ball and I'm no expert here, but I can only go off of what history tells me. I can only go off of what the stock market and what it means to so many people. Most of them are 1%ers. You got $55 trillion in there, guys. Again, now, if you get a pandemic or something like that, all bets are off. That's out of our control. You get into a war, all bets are off. But this whole little notion of, oh yeah, the Fed ain't gonna reduce. Boy, the Fed reducing those rates, guys. I'm here to tell you, I don't care what they say. They're gonna reduce some rates. Or they're gonna have so much pressure coming from that White House. Because one thing I can promise you, President Trump, this guy does not want to be coming out of this thing in 4 years and have this country worse off economically than when he got in that seat. That's his legacy, see? This is his last bite at the apple. So he's going to do everything in his power to make sure the stock market, assets, companies do well under his 4 years. Whether you like him or not, that's irrelevant. Doesn't matter. It doesn't matter if you like him or not. What matters is the truth. The truth is the stock market is a continuous bull market. And it has been from day one. It has never been at zero from day one. It has always went up. I just gave you the statistics on the S&P over the last 5 years, guys. 89% over a 5-year period, and it's gonna do better this next 5 years. That's my opinion. Not an expert, not a financial advisor, but just trying to give you guys some tips, some nuggets. In our financial community, we are strong. And the reason we're strong is because we have over 1,200 of you guys in this community. Every single day in that community chat, dropping golden nuggets, tips, best practices, what's working, what's not working, asking questions, and you guys participating and helping answer those questions. Not that we're experts, but because when you got 1,200 people in the community, you can either serve good or you can serve bad. That's up to you. We serve good. We serve good because we know if we do good for somebody else, that person one day will do good for us, or there'll be somebody that'll do good for us. That's how karma works. I call it divine intervention myself. See, God don't like ugly. That's what my grandmother used to tell me when I was a little kid. I'd be around there doing stuff I ain't got no business doing. She'd say, God don't like ugly. You know that, right? And I was like, what? God don't like ugly. See, when I was a shorty, when I was a little kid, I didn't understand it. But as an adult, I understand it. God ain't gonna bless you unless you bless somebody else. You gotta bless somebody to get a blessing. Right? That's what we're about, is helping people. And in turn, we get what we want. That's a blessing. That's how it works. So that's what we do here in the Wealth Builders. We help one another. And by doing that, all of us succeed. So I want to say thank you and appreciate you guys for doing what you do in the Wealth Builders. There's no other place like it. I'm just that type of guy, man. When I get myself involved in something, I give everything I can to that group of people. Just like with my YouTube channel, and especially with the Wealth Builders. You guys mean a lot to me. And I want all of us to be successful. I want all of us to be ready and prepared to take advantage of this wealth that will be transferred in 2025. Just like I told you guys it would happen in 2024. What happened? And not because I'm some expert, guys. I'm just telling you it's a continuous bull market. You ain't got to be no expert to understand when you got $55 trillion in value in something, and it's the number one asset in the world, you don't have to be a rocket scientist to figure out there's a lot of people will not let that fail. This little dip we got right now, that's an opportunity, guys. We should be all over this opportunity right now. You're only going to get 2 or 3 of them this year. This is one of them. This is a rainmaker. It rains money while you're in the red. Today, I executed big time. I took out a large position in the red because I know it's going to turn green. At some point, it's turning green. And when it turns green, the net worth going to skyrocket. See, I love the red because I know that's where the real wealth is built, in the red. See, you build wealth in the red. You collect that wealth in the green. You collect the wealth in the green, but you build it in the red, right? So all of us should be out here hunting. It's hunting season, right? It's hunting season. We should be taking advantage of this temporary consolidation and correction, because that's what it is. Let's not get it twisted. That's all it is. It's a temporary correction, temporary consolidation. It's strictly market behavior, right? It's market behavior, what's happening right now. The good news is tide will change. It will turn. I believe it turns next week. Why? Because, and correct me if I'm wrong on this, I believe on January 20th, which is next Monday, I believe that's when Trump is coming back into office, right? And again, guys, I don't care how you feel about it. That's your personal thing. I'm about building my wealth. I'm about building wealth, right? I'm about building wealth. And every president since I've been alive, has done the very best that they can to help run this country. I gotta have faith in our system. I don't have to put my faith in no man or no woman, but I gotta have faith in God, number one, and know God ain't gonna let any harm come to me. That's how I go to bed at night. I don't worry about any of that. I know God won't let any harm come to me. Y'all gotta find something in your life. I don't know if it's your faith. I don't know if it's your family. I don't know if it's good friends. I don't know what it is, but you better find something in your life that means more to you than just you. You better find something else that means more to you than things. You better find something in your life that means more to you than greed, pride, fear. 3 financial killers, right? Got to find something bigger than that, something more that means more to you in your life. That's how you get through all this stuff. Again, I think January 20th, on Monday, January 20th, I think we'll see things change. Not because of some person going into the White House, but because of people's enthusiasm for that and the momentum it's going to generate, guys. See, a lot of the stock market, guys, is about momentum. It's about potential. It's about what could be. A lot of people invest in those things. They invest in what could be, potential, enthusiasm, FOMO. A lot of that drives the stock market. And whether you like who's going in the White House or not, it's going to be euphoria around that. It's going to be people who want to make things happen because of that. And that's going to be reflected in the stock market. So I think Monday, January 20th now, I believe that may be MLK Day, so the market might be closed. But whenever the market opens next week, I don't know when it's going to open, whenever it opens, things change. This week, you're going to start seeing things starting to creep back up. This is just my opinion, guys. I'm no financial advisor, so don't, if you go out and do your own homework and come up with your own conclusion. I'm just giving you my little 2 cents. I'm going to tell you what I believe is going to happen. Today and tomorrow are going to be dip days. But by Wednesday, CPI inflation report going to come out. On Wednesday, I believe. CPI inflation going to come out for December, closing out last year. I believe that's going to I believe that's going to be a report that just shows inflation is not increasing. Long as it doesn't show inflation drastically increasing, that's going to be a catalyst. That's going to be a tailwind to start this little reversal, this little rally that we're going to have. That's what I think. Again, guys, I'm no professional here, so go do your own homework and come up with your own conclusion. But I think by Wednesday, that CPI inflation report for December, although it was for last year, the end of last year, it's going to be what? A positive tailwind, a catalyst to start this thing going back up. By Friday, we're going to see a little bit more. By next week, I think we're going to see even more. And that will start the upward movement, in my opinion, in the stock market. And for all of us who were not afraid, had money, had some things, money to put into to transferring wealth through the dip, we're going to look at our portfolios and say, well, you know something? Yeah, I'm glad I participated. Now, whether it happens next week or whether it happens 2 weeks from now, 5 weeks from now, 10 weeks from now, at some point it will happen. I believe at some point it will happen. I think it'll be next week. Again, just my hunch, just my prediction. You guys go out and do your own homework and come up with your prediction, right? So that you know how to move with your money. Again, my job here is not to be the expert. My job here is not to allow you guys to think for yourself. That's not my job. My job is to share with you what I'm doing. Share with you my philosophy. Share with you my opinion. Ultimately, you investing in what you invest in is your decision, not mine. So please figure out, are you ready? Are you ready? Please figure out if you're ready or not. If you're not ready, get ready. Get ready. And if you don't know how to get ready, DM me. And I'll tell you how to get ready. Or at least according to my opinion, how. And you can take that, use it, or don't use it. It's up to you. But get yourself ready for this wealth this wealth that's getting ready to transfer. This year, guys, this little mini correction, this little mini consolidation is not going to last forever. At some point, we coming out of this thing and going back green. And my goodness, the investment I made today, and I'm going to make another big one tomorrow. When this thing go back green, whew, net worth going to go up, man. Why? Because I understand it has to go up at some point. Unless we get another 22, which I don't see any direction towards a 22. And even if we did have a whole year, like we did in 22, where everything was negative for a whole year, basically, I'll just buy the dip for the whole year. Because I know another 23 is coming, and I know a 24 is coming too. Right? Because we know there's not one 10-year block of time in the history of the stock market where it's traded at a negative in a 10-year block of time. Never. Ever. So all I'm telling you guys is get ready. Wealth builders, get ready. Do not sleep on this. Do not sit around, oh, I'm going to just keep mine on the sideline. There's something bigger coming. I'm going to get back in when it starts going up. You can do that. Nothing wrong with that strategy. Many people do it, but it's not a real successful strategy. Not what, at least what the statistics tell us. Not Richard Fain telling you that. I'm just telling you what the statistics say. See, the statistics say DCA, historically, for retail investors, is the best way to build wealth. Now, if you're a Wall Street alien and you got access to 100 people that's doing research 24 hours a day, and you got computers and all these high-powered computers doing all the algorithms and all that, if you got all that on your team, then you can do whatever you want to do. But if you ain't got all that, like I don't have any of that, I got an iPhone. See, so DCA long-term is the best strategy for me. Now, yeah, I'm gonna sprinkle in some shorts. I'm gonna sprinkle in some shorts, but the DCA, the long-term investment strategy, is really the game changer. So don't lose sight of that, guys. DCA is number one. Big boy blue chip, long-term. That's number one. Number two is sprinkle in a little bit of short strategy if you want to. For a lot of you guys, you're not comfortable with that, then don't do it. Just stick with the long-term stuff. There's some of us in the wealth builders are comfortable with it, and we do it, but it doesn't replace our long-term strategy. My safety net is the long-term strategy. Don't lose sight of that, guys. The long-term strategy is the one that wins for retail investors. Again, if you got access to all the stuff in the world, then go out there and get it, but most of us don't. All right, let's get into the Q&A, because we're going to try to tighten this thing up and get out of here by 9:30. So let's get on into the Q&A. We got an hour for the Q&A. But I had to give that to you guys, and I know some of y'all may not have wanted it, but I had to give it to you, right? It was on my heart, and I had to give it to you. So here we go. Sean, thanks for taking your time to share these valuable lessons, information, and strategies. It's literally a blueprint for success in investing. Thank you, Sean. I appreciate that. That's my goal here, is to take my knowledge over the last 30 years and give it to you guys. Every day, 365 days a year, I'm giving it away on that YouTube channel. Every day, I'm introducing something new. Today, I introduced, what was it? IonQ, quantum computing company. Could be a monster. Who knows? Did a little research, put it on the YouTube channel. Don't know if anybody watched it, but hopefully somebody did, and somebody said, oh, you know, I'm gonna go research this thing. This might be good value right here at $54 is the 52-week high, and it's trading in the 20s right now. Last week, it was trading in the 40s, guys. What happened to the company from last week to today? Nothing other than market behavior. So there's a very, 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 very good likelihood it's going back to the 40s again, and who knows, maybe beyond. Maybe that's an opportunity for somebody. See, this is the way I look at it. First thing I ask myself is, what's different about the company from 2 days ago? What was different from Monday to Monday? 5 business days ago. Did the company file bankruptcy? Did they lose their CEO? Did their operating facility burn down? Nothing happened, guys, to the company. It's just market behavior. This is how the market works. right? This is how the market works. So is it value there? I think it is. I think there's value there. I think there's value when a stock goes from in the 40s down to the 20s and there's no business performance issues. That's value. I'm not telling you to go buy that thing. I'm just telling you what my thought process is when I'm looking at a company. I'm looking at the stock price and say, well, golly, why is it falling? Is there something wrong with the company? No, nothing wrong with the company. Oh, okay, that's just market behavior. That's just the market doing what the market does. It'll come back once we rotate back into tech. Y'all know we rotate out of tech frequently, but we'll rotate back in. When we rotate back into tech, I'm just saying, just prepare, get yourself ready. Just like the title says, many people are not ready for what's coming. And to me, that's sad when you can be ready. So as wealth builders, let's be ready. Let's not, listen, we're not in the matrix anymore. We've decided to take ourselves out of the matrix and come into a financial community like the wealth builders. We got to think like wealth builders, guys. We can't be in here scared, timid, scared to ask questions, don't want to pull the trigger on nothing. You still got the same mentality you had when you was in the matrix. When you come out of that matrix, you got to change the way you think, guys. That's why the wealth builders that's the only reason it exists. To help you change the way you think and to reprogram your filter system. You got to reprogram your filter system or you're going to miss your financial blessing. You can't be here in the wealth builder still thinking like the matrix got you thinking. We got to help you change that. That's why I'm here, and that's why the rest of the wealth builders are here. So if you're still thinking like you were thinking in the matrix, you need to grab a hold of myself through DM, or you need to get in that community chat and drop some questions so these wealth builders can come in there and help you reprogram your filter system. Right? You got to reprogram your filter system or you're going to miss this wealth. And you don't want to do that. All right, Timothy. Good evening, Mr. Fang. One of my goals this year is to purchase another piece of real estate. I currently have a primary residence home that I've lived in for 10 years. I plan to use it as a launching point to obtain a rental property. My questions are, should I wait until interest rates drop to buy another home with just 3% down, live in it for 2 years while renting out my primary home and then repeat that process every 2 years? My concern is getting stuck with huge mortgage payments because rates are still high. Okay, that's one strategy. Let me wait and see. Let me wait on rates to come down. What if rates don't come down for 2 years? And then when they do come down, what if more competition hits the market? What if more demand hits the market, which it will? Guess what's going to happen to prices? When more demand comes and we ain't got enough inventory, price is going to go up. So here's the strategy for me, guys. I much rather have a higher interest rate and buy the house for less right now. Give you a scenario. Let's say I'm looking at a $500,000 house that somebody got up for sale for $500,000, but it's been sitting on the market for 6 months. It ain't sold yet. They want $500,000 for it. It ain't sold yet though. So a guy like me goes in there and says, oh, great house. Listen, here's my approval letter. I'm qualified. I'll give you $400K. Let's get this thing sold. You've been holding this thing for 6 months. You got property taxes, you got repair and maintenance, you got HOA fees, you got taxes, you got all kind of stuff. Let's go ahead and get you out of this property. I'll give you the $400K. You give me $100K off. You go on and start your life somewhere else with a different property. Do whatever you want to do with it. Let's get you out of this property. Right now, you can do that. Why? Because it's a buyer's market. And I know some of y'all will disagree with that, and that's okay. But I believe it's a buyer's market. I believe there's inventory sitting out there on the market that people ain't buying. Why they ain't buying it? Because the interest rate's too high. Most Americans cannot buy real estate to live in with these types of interest rates. So it gives a guy like me an opportunity to be a good negotiator. Listen, you want to hold that property another 6 months? I'm going to give you $400K. Okay, Richard, I'll take it. So I take the 400K, put my little 20% down, finance the rest at a 7% rate. Okay, so what? Next year, the year after that, rates come down 2 or 3%, refinance it. I'd rather get a lower price on the property and get the higher interest rate. Here's the deal. If you do the thing right, the interest rate don't matter because the rental income gonna cover it. Don't buy anything that won't cash flow. See, when I go in to make an offer on a rental property, I've done my cash flow and I'm gonna tell the owner or owners, hey, I done the numbers on this thing and here's the price that I need to be at in order to make my numbers work so I can make some money. I need to make money in this transaction just like you need to make money. But if I don't know my cash flow, if I don't know my cash flow on my rental property, if I don't know my break even on my rental property, see, I can't have that conversation with the seller, or my real estate agent can't have that conversation. So before I even make an offer on a rental property or that's going to be a rental property, run the cash flow. The cash flow will tell you what loan amount you need to get in order for the cash flow to support it. What purchase price you need to buy that property at, minus your 20% down, what it would take to cash flow that property. So always do the cash flow and then go in from a position of strength, knowing that, listen, the cash flow, I'm an investor, sir, ma'am, on that duplex, on that 3-unit, on that 4-unit. Hey, I'm an investor. I'm here to make money. Now, I'm not trying to short you, but you've had a good run since 2019 to now. Your property has went up by 30, 40, 50, 60, 70% in value. So you ain't hurting. If you want to sell the property, this is where I'm willing to give you. Or you can hold it. That's how it is, guys. And if they don't want to do it, go to the next one. That one, go to the next one. It's people out there that's ready to sell these properties. You just got to find them. How do you do that? Get you a good real estate agent that understands the market. Get your professional real estate agent that understands the market. And that's a bird dog because they eat what they kill, right? They get paid when they close deals. Some of us want to hire Cousin Pookie. Some of us want to just try to do it ourselves. We ain't got no experience at this. This is not a time for us to be an amateur. We need to go get professionals to help us find these properties, guys. So for me, Timothy, I love the strategy, but I'd execute right now. I would use high interest rates to get me a lower price on whatever property I'm buying. That's what I would do. And then in a year or two, just refinance it. Make sure the cash flow works at 7%. Make sure the cash flow works at 6.5%. And if it don't work, go in with a price, offer a price that does make the 7% work. See, this is what we mess up, guys. Oh, they want 500,000 and I can't, it won't cash flow at 5. I don't care what they want. Your house is worth what somebody will pay you for it. I don't care what the market says. The market for 6 months ain't paid you that. I'm gonna pay you something. I say this is what it's worth. And this is what I'm willing to pay until you just keep going through sellers until you find one that's motivated. You will find a motivated seller out there. You will have a seller who has landlord or homeowner fatigue. That's who you're looking for. That's why you need a professional real estate agent to help you. You need to find people that are fatigued, man. They tired of them HOA fees. They tired of them real estate taxes. They tired of the water bill. They tired of all this stuff on this property. They want to move on to some other beautiful property. They ready to get out of this thing. I got people right out here where I live at right now. I got the signs all along the doggone street. Beautiful community. At least 10 or 15 of them up for sale in here. Ain't none of them selling. And about 5 or 6 of them brand spanking new. Ain't even selling. See? This is what I'm telling y'all, guys. If you're looking to buy real estate, right now is the best time to do it, in my opinion, Timothy. Run your cash flow. And if you don't know how to run the cash flow, you need to do what? DM me, give me all the particulars. I'll run the cash flow for you and send it back to you. And I'll do that for you. But you got to send me a DM. You got to give me all the particulars on the deal, or just send me the address and I'll do it myself. I can just go right on Zillow.com and get everything I need to run the cash flow. So, and then we'll get you on the right path. Regina Vaughn, good evening, wealth builders. Good evening, Regina. Glad you popped in, checking in for a minute. Joe, hello, Mr. Fain. What do you think of GVO, long-term or short? That's a great question, Joe. You must have watched my video I did last week on GVO. Yeah, it's a short for me, right? Congress is buying it left and right. And right now, I can't even remember where it's at right now today. Let me see where it's at today real quick. Let me see where it's at right now. But yeah, GVO is definitely a short for me. Yeah, you at $2.15. It closed at $2.15. 52-week high is $3.39. 52-week low is $0.48. So here's what I'm doing, 48 cents. Here's where I'm at. Until it gets to around $1 or under $1, that's when I'm a buyer. Right now, it's at $2.15 and dropping. If it gets under $1, I'm a buyer, man. I'm a short-term buyer. Because I know when we catch that next rotation back into tech, it's going to go back up to $2. $2, $2.15, $2.20, $2.30, something. It's going up. So that's my opinion now. That doesn't mean that there is no charts or graphs or any real research done on that, guys. I've done this for a long time, and I'm just telling you what's happening. If it's at a 52-week high of $3.39, 52-week low of 48 cents, I want to be close to the 48 cents. Now, I'm not going to bet the farm on it, but I'll take a little bit of money and throw at it at the right price. It ain't at the right price today for me at no $2.15. That's too risky. For me, it got to be under $1. So I keep it on the radar, periodically check it. I got like 15 of them right now on my radar. And I got them all saved in my notes in my phone. So I can pull up them notes, all 15, none but ticker symbols. And what do? I take every single one of them and check on them every day to see where they're at. All of them. It's like 15 of them, right? Because I add some every day. And all I do every day is figure out what is the temperature in the market. Once I sense the temperature starting to change, yeah, that's when I'm back into the shorts. Today, I didn't execute shorts. I did execute a short, but it's a big boy company. It wasn't one of these little small ones. It was a big boy company. Super Microcomputer. Executed a large trade on Super Microcomputer today. Under $30 a share, no brainer. I learned my lesson the last time. Didn't bet the farm on it like I did the last time. But I made a significant investment in it. It was under $30 a share. I think soon as they rotate back into tech, soon as they rotate back into artificial intelligence, semiconductors, which it will at some point, when they rotate back in, I'm at $30 a share. It gotta be at least $35 to $38 to $40 a share when they rotate back in. As long as they don't do nothing stupid out there, it'll be fine. So I'm gonna be okay in that trade. That's a short, even though it's a big boy company. So I don't just mess around with these little companies. I'll also see in the environment I'm in right now, it makes more sense for the dollar amount that I'm moving and investing, big boy companies. Once I sense things changing with these little companies and they're getting ready to take off again, and when I say take off, I'm just talking about optimism. I'm just talking about FOMO, right? Because they're not gonna grow that fast. But the FOMO and the optimism, because people don't want to miss out, the fear of missing out is going to drive up the stock price again, just like it has done in the past for these little companies. And that's when I'll really concentrate more on the little companies once the FOMO comes back. Right now, ain't no FOMO in GVO, even though I know a lot of Congress people are in this stock. A lot of them. So something's coming with this company. One thing, they're in line to get a big contract from the Department of Energy. It's like a $1.6 billion contract from the Department of Energy. Now, I don't know if that deal has actually happened yet, but they're in line for it. If they get that, that can push FOMO, that can push optimism, that can push potential. See, a lot of these little companies like this, guys, the reason their stock price goes up is because of potential. The potential for somebody to make a bunch of money when they get it right. That's why the stock price will go up. But what happens is when you rotate out and you got somebody like Jensen Huang CEO of NVIDIA, comes out and says quantum computing is 10, 15, 30 years away, that's a perfect excuse for people to dump the stock after it's already been pumped. They dump it. That's the perfect excuse. Here's the good news. Quantum computing is not going anywhere. And ain't nothing wrong with these companies. So at some point when rotation back into them, they're going to go back up. How high they go, I have no idea, but they will. Because ain't nothing wrong with the company, right? The stock was overvalued. Why? Because it was hype. But a lot of the companies in the S&P 500 are overvalued because of hype. That don't mean they're not good companies. That don't mean they're not good investments. A part of the stock market is hype. It's a part of it. Let's just face it. A part of what we do in the stock market is hype, guys. It's hype driven. It's potential driven. It's optimism. It's FOMO. A big part of it, right? So let's not shy away from that. Let's just know how to recognize it and when to attack it and when to pull back off of it, right? We just need to know those things, and you learn that kind of stuff by repetition. Not being afraid, sitting on the sideline looking for somebody to tell you something, but making mistakes, learning from those mistakes, and not repeating them. How do you learn from your mistakes? You invest small amounts until you get comfortable and you've gotten through some of the mistakes, right? If you want to do some shorts, hey, take $100, take $200 and get your feet wet. I wouldn't be jumping in there with no $10,000 and I don't know what I'm doing, right? Take the $10,000 and put it long. Throw it in an S&P 500 ETF. Throw it in an information technology ETF. Throw it in the Magnificent Seven if you don't know what you're doing, and just let it go. Those are the experts. But if you're going to mess around with these little shorts, you got to learn something, right? You got to learn some patterns. All right, let's go. GVO, yes, it's a short for me, but certainly can be a short or a long for you. But for me, yeah, it's definitely a short. All right, let's keep going. Let me see who else we got in here. Oh, man, we just picked up quite a few. All right, let me get back on task here. Running my mouth a little too much. Let me get back on task. All right, so Maurice Banks, Richard, is it a good idea for a beginning investor to buy stock/ETF shares during non-market hours? Well, you know, that certainly is someone's option. I mean, I can't say beginners or experienced folks. I just think if you know what you're buying and you're willing to take the risks associated with it, then do it. I think you can pick up good deals in pre-market. I think you can pick up good deals in aftermarket, right? Now, of course, normal trading hours is probably where most people make their trades. Most people don't use pre-market or after hours. Most people just trade during normal hours. But I'm gonna be honest with you, 99% of the time when I make trades, guys, is during normal hours. I rarely make a pre-market trade. And I've made some, but rarely. I rarely make an aftermarket trade. I normally do all of my trading after 9:30, between 9:30 and 4 o'clock p.m. Preferably for me, normally when I'm in shorts, I do it first thing in the morning. That's the strategy that works for me. On my longs, it don't matter. Right? It doesn't matter. I'm DCA on those. I don't care what the market's doing. Up, down, sideways. Who cares? I'm in this thing 10 years. All I'm doing is concentrating on getting the money in the big boy blue chip, proven historical record. So I don't worry about when I don't need no aftermarket and all of that stuff. I just dollar cost average automatically in every month, same stuff. I don't change that. 50, 30, 20 every month, clockwork, period. So it ain't nothing for me to change. It ain't no worry about no. Only thing I worry about aftermarket, pre-market, aftermarket, regular normal, is the shorts. And me, I prefer doing my short strategy in the mornings when the market opens. I don't need no surprises. I like to be able to see what the temperature is with the market before I put my money in there. I mean, sometimes you can do this thing pre-market and the thing flip on you when the market opens or vice versa. So I don't like that. I don't like that. Not that you can't do it, and not that I won't do it. It's just not my preferred method. My preferred method is normal business hours. That's my preferred method. So hopefully, Maurice, that answers your question. But nothing wrong with pre or post. It's up to you. It's your preference. My preference is normal market hours because I like to be able to know I like to see what's happening. A lot of times in pre-market, post-market, you can't really see what's happening. It's all limit orders. You can't do market order. Yeah, so not my thing. Let's see, Sean, thanks for taking your time. Information is valuable. Okay, I think I already did that. Did Timothy already. Did Regina, did Joe. Okay, let's do Nick. Hello, any suggestions on what stocks to invest for long-term this year? Thank you very much. Nick, you need to go get the Wealth Transfer Blueprint 1.0. You need to send me a DM and get the Wealth Transfer Blueprint 1.0. And if Tracy or anybody else is in the live, please go to Nick's question and drop the Wealth Transfer Blueprint 1.0, 2.0 in his little box right here, because that's it. That's it for me, guys. I don't change up my investments when it comes to my long-term wealth. That's it. Blueprint 1.0, 2.0, that's it. Nothing else. So please, somebody drop that. And if not, Nick, if you don't get it dropped to you, just send me a DM and I'll send it to you. Let's see here. That's a tough name. I can't pronounce it, but I'm going to spell it. Yurag. Okay, I can't pronounce that, but thank you for the question. Hello, Richard. Just wanted to say thank you for everything you do, and I and all of the wealth builders appreciate you a lot. Thank you so much. I appreciate that. Yeah, I love doing what I do, man. So I love it. So I appreciate you guys for allowing me to rock with you, and y'all rocking with me. So thank you. Greg Roberts. Hey, Greg, how you doing, man? Good evening, my brother Richard and my fellow wealth builders. I hope everyone is in the red. I have no questions today. Just want to let everyone know to stick to your guns. Y'all keep riding them waves to get to that pot of gold. Thanks for turning us all onto this wealth machine, Richard. You're welcome, Greg. I appreciate you, man. I appreciate you rocking with me on multiple platforms, so thank you. Stephen H. Good evening, Richard and Wealth Builders family. As always, thank you, sir, for sharing your knowledge with the group. And thank you to everyone else that also shares their knowledge. Shout out to the new members of the group. I don't have a question tonight, and I'm going to sit back and listen. God bless you, Richard, and everyone in the group. Always be buying. ABB. Thank you so much, Stephen. ABB. Always be buying. CPA, right? CPA as well, guys. We gotta be consistent. We gotta be passive, and we gotta automate those investments, right? And what do I mean by consistent? Dollar cost averaging, putting that money in every single month. What do I mean by passive? I mean, we're not the experts. We lean on ETFs, index funds. They're the expert, right? That's passive. When I'm active, like I am in my shorts, then I become the expert. I'm no expert, but I got to put the expert hat on, even though I'm not an expert, because I'm the one picking the winners and losers. There ain't nobody here sitting here with me picking winners and losers, guys. So I assume and put on the hat of the expert, even though I'm not an expert. But see, when I'm in the big boy stuff through Wealth Transfer Blueprint 1.0, the ETFs are the expert. Vanguard is the expert. State Street is the expert. Fidelity is the expert. Charles Schwab is the expert. And all they're doing is doing what? Tracking the S&P 500. That's real. The ultimate expert is the S&P 500 index. The ultimate expert is the information technology sector. Right? So that's it for me. I don't want to be the expert unless I'm doing shorts, right? Which is a small part of the portfolio. The majority of the portfolio is passive, not active, right? So always be buying, just like Stephen said. That is definitely true. Always be buying. Sharon King, good evening, Mr. Fain, and all the wealth builders listening and paying attention. Really appreciate this family, Mr. Fain. You are on point with your teachings and experience. I have learned if you find someone who have the expertise and discipline in the particular field, follow, learn, and execute. Well said. Well said. Because I follow that same principle as well. When I latch on to somebody that I believe is genuine and actually knows what they're doing and ain't trying to fleece me, every time I turn around, they want me to send them money for something. Listen, I do exactly what Sharon just said. I do exactly what she just said. Follow, learn, and execute. That is so true. I always want to purchase stocks, but did not know where to begin and was a novice. I followed your blueprint and it's a wrap. Keep telling y'all guys, that blueprint. And I know many of you wealth builders have decided to either adapt that blueprint or modify it somewhat to fit your needs, but basically you're still doing the traditional investing, right? Buy and hold, big boy blue chip, long term. And then you just throw in your S&P 500 ETF of choice or whatever ETF you believe gets you to the pot of gold. But the goal is to be passive through ETFs with the majority of the portfolio. 80% of mine is passive with ETFs. 20% is the big boy individual stocks, the Mag 7. So I feel good about that. These last 2 years have been monsters. Monsters. And I think we get a trifecta this year. That's just my opinion. Thank you, Sharon. Money Mac 5. I'm enjoying the discounts for my long haul plan. Good evening to all. Money Mac, you're on track. Keep doing what you're doing. Keep your head down. Keep earning. Keep protecting what you earn, keeping what you earn, and keep on multiplying that thing into what? Long-term wealth transfer blueprint 1.0. Just do that every month, every year, until you get to that pot of gold at the end of the rainbow. That's all you got to do, guys. Money Mike got it figured out. Only Lord knows. Hello, Richard and family. Hope all is well with everyone today. Happy Monday. Thank you, Richard, for the nuggets. The list of stocks you have mentioned makes me feel like a kid in a candy shop. I definitely am leaning towards IONQ. Upon doing research on this company, its major institutional holders are State Street. You know something? That is exactly what I like to hear. See what I'm saying? Lord only knows. Been in my brain. He living inside my brain. I've been telling you guys, go look up who the shareholders are of these companies before you put your money in them, especially the shorts. Go look up the shareholders. It's public record. Go to Google, hit the microphone on your phone and ask ChatGPT to tell you who the top 10 shareholders in this company are. You're living in my brain, Lord only knows. You're in my brain, man. Appreciate you. I'm glad you mentioned that because that's what you got to be doing. So what does he do? He caught the tip this morning from the video, and maybe he already heard about this company, but maybe he watched my video and he said, you know something, Richard got this on his radar. I done heard about it, but let me deep dive this thing. Let me dive into this thing and see if it makes sense. So he dives into this thing and he goes and pulls up the major institutional shareholders. And lo and behold, who does he run into? Who does he run into when he does that research? See, Lord only knows there's no professional at this. Lord only knows has a job or he owns a business or he's doing something most of the day. He got his family. But guess what he does? He prioritizes. Guys, ain't no wealth in your future if you're not willing to prioritize your wealth. And when I say prioritize, do a little homework. You ain't got to be no professional. Lord only knows ain't no professional. Neither am I. But what does he do? He goes and uses Google or whatever method he uses and he pulls up who the shareholders are. Why does he do that? It helps your confidence, guys. If State Street Corporation, Morgan Stanley, Acme LLC, Rockefeller Capital Management LP, BlackRock, Vanguard, all of these people are invested in IONQ. See, now it makes my decision a lot easier because why? They're the experts. And if these experts, you're talking about BlackRock, who is the #1 wealth institutional, whatever you want to call it in the world. They got over 10 trillion under management. Guess who #2? Vanguard, with about 9 trillion under management. And both of these companies they got shares. See, all I'm telling you guys, if you want to learn how to do this thing, follow the blueprint from Lord Only Knows. The blueprint is pretty simple. Figure out who's invested in the company. Go to that company website, figure out what they do, what their secret sauce is. They'll tell you right in the doggone website. And then from there, I'm going to go find out who the other people who are buying this stock. And if they're institutional investors, you already know it's a serious company. Now, that ain't going to give you no guarantee, but it will give me peace of mind to know I'm not the only one in it. Oh, me and 5 other people are in it. No, you got the big boys in here. So they must know something I don't know. But that helps me feel better by putting my money in it when the big boys are in there. If ain't no big boys in there, I don't know. May think twice about that company. They got to have big boys in there. And when I say big boys, I'm talking about institutional investors. See, they got a fiduciary responsibility to the people that put money in their company. They can't be out here willy-nilly in. They can't be Bernie Madoff in it. They can't do that. Not BlackRock, not Vanguard, not State Street, not Morgan Stanley. They can't be a Bernie Madoff. They got to do due diligence. They got to make sure this is a solid company. Everything checks out before they put that institutional money in there. It's a whole different ball game, right? It's not some billionaire. No. This is institutional investors. These are other people's money that they're investing. So they can't put a Bernie Madoff. Not these companies. So if they're in IONQ, Inc., hey, man. But again, I'm not taking credit, but I did make a video on it this morning. Lord only knows. I ain't taking credit, but I did do a video. Just want y'all to know I'm right there with you. But I love to see things like this where he is actually doing what we've been talking about. See, you ain't got to be no expert to know to do these little tricks, these little shortcuts. That's a better word. Shortcut, not trick. Shortcut. Nice little shortcut. Guess what? Now I done collapsed a lot of time frames. I done released my anxiety because the big boy's in here. Now I get to make a decision if I want to be in there with the big boys. That's it. Let's go. Let's go. Let's go. Any of these stocks you mentioned going into your portfolio for possible long-term holds for you. Right now, Lord only knows, I gotta say, I don't have really any of them on the long-term horizon. That doesn't mean they won't turn into it. But for right now, the only short that right now that I think could possibly turn into a long-term would be Rocket Lab, right? Because Rocket Lab is, as they get more contracts from NASA, whoever else, I'm just continuing to watch the revenue, right? See, it's all about the revenue. It's all about profitability for me. Until these companies can be profitable, increase revenue and be profitable quarter after quarter, year after year, it's going to be hard for me to go long-term with them. Because see, I don't want to take my money and put it in somebody that ain't proven. I'd rather take my long-term money and put it in the big boys. And then I'll use these little ones for shorts. Now, if they turn themselves around and they go to making money and be profitable and increasing the market value and providing more value to the shareholder, then great. Maybe they go long, but they ain't. Right now, a lot of these companies are hype driven, right? Huge swings up, huge swings down, AKA rigidity, AKA QUBT. A lot of them, they're all swings up and swings down. So you got to be careful with them, and you just got to, long term, I think they'll be fine. But for right now, you got huge swings one way or the other. So to be a long, I don't need no huge swings. I need consistency, proven track record if I'm going to put my money in long term and wait 10 years. I don't want to get to the end of 10 years and have zero, no growth. I don't mind buying a little short, getting me $1.02 share increase and jumping out of it. I'm okay with that because that's just FCF. But this money I got long term, boy, I got to pay for a lot of stuff for the lifestyle. I got to leave a legacy for my children, a financial legacy. So I cannot fool around with the big boy stuff. I got to hit a home run. Well, not home run, but I got to get on base. I got to hit a double, triple, something. I ain't got to hit a home run, but I got to get on base. I got to get a double. I got to get a triple every now and then. These little bitty companies ain't proven themselves enough to me to be in my long-term portfolio. But they're good companies for the shorts, though. So let's see here. Thank you again, Richard. I plan on being one of those new millionaires in these coming years. I definitely feel it. P.S. That view in Boulder was awesome. It almost looked like my hometown in Nevada. God bless you all. Appreciate that, Lord only knows. And I'm with you, man. You will be a millionaire. You will be, period. If you continue to be consistent, disciplined, and patient, and keep doing what you're doing, taking that money you're earning, not making somebody else wealthy, but making yourself wealthy, definitely, no, hands down, you will be a millionaire. And we're going to call that thing into existence because I know you're going to do the work to back it up. I know you're going to do the work. Perfect. Let's keep moving. Tracy. Hello, Wealth Builders and Mr. Fain. Hope you are all doing well. Tracy, we hope you're doing well as too. Definitely. And hopefully everything is good at home. I personally like the secondary shorts strategy, but I definitely takes more focused research, patience, and discipline than traditional buy and hold investing. My question is, in your experience, do stocks usually have a surge after a positive earnings report? And does it matter if the earnings report comes out pre-market or post-market hours? Thank you, Mr. Fain. God bless you and more. Great question, Tracy. Here's the thing. Here's what I figured out last year with NVIDIA. It didn't matter that NVIDIA had killer numbers, right? It didn't matter, right? The only thing mattered was the next thing. So they blow out quarter two. Only thing people could think about was, well, what's next? You didn't give enough guidance. You said you would only do 32 billion in Q3. We think you need to do 37. So guess what? We're going to sell off. We're not going to buy it, even though you had a killer two. Even though your second quarter was mind-blowing, you did 30 billion in revenue in the second quarter. So then they come in the third quarter. Third quarter ends, what do? Knock it out the park in revenue. I think they did what? Y'all correct me if I'm wrong, 35 or 37 billion or something like that. I think it was over 37 billion. But whatever it was, they did more than what was expected of them. Then what did they say when they sold off the stock after the killer numbers? Guess what they said? We didn't get enough information on Blackwell. We need more information, more positive information on Blackwell. So my point is this. You just don't know, right? You don't know. Company does well, stock sells off. Company doesn't do as well, stock price goes up. Again, a lot of it is about market manipulation, guys. See, what you got to understand about some of these companies like a NVIDIA or NVIDIA, however you want to pronounce it, that had rapid growth. They had rapid growth from 2024 to now. 2023 to now. Rapid. Out of this world growth. But a lot of that growth came off of what? Potential. What it could be. Right? It came off of potential, what they could be. Now, big time investors are saying, no, we done with that in potential stuff. Only way we're going to be invested in you big time like we used to is you got to prove you can grow that revenue and make the valuation make sense. And that's where they're at right now. But I believe they'll do that. For other companies, it could be other things, right? It could be other things. Again, my preference is when I'm let me just give you this little company. A normal company, I'm talking about not a tech company, not an NVIDIA, not an AMD, not any of these fast-growing hyperscalers or mega caps or semiconductors. Not them, but a normal company. Let's take a normal company like Walgreens that I bought on Friday. A normal company like Walgreens. Here's what I'm saying. With a normal company like Walgreens, when you come out, now here's the deal though, it's about a 9-10 billion market cap, I think, something like that. 9 or 10 billion market cap. But a normal company who has been around forever, who beats expectations, the stock price goes up. Just because that's a normal company. Why? Because there is no potential. There is none of that in there. It's a mature company that's been around. People know it's going to consistently do what it do. Walgreens, CVS, they're going to do what they do. There ain't no whole lot of FOMO in that. So when they do well, they are rewarded by new investors coming in. So when I looked at it Friday morning, because see, for them, they did their November 2024 earnings report ended November 2024, right? So it was, I don't know which quarter it was. I don't know what their fiscal year is, but it was for ending November 2024. That's what they came out with. So they did theirs as soon as the market opened at 9:30. Matter of fact, they might have did it at 9 o'clock. I can't remember when they did it, but it was, you could see it in the green pre-market. So they must have done it at 9 o'clock, 8:30. I don't know. It was something close to when the market opened, but it was moving in pre-market. And see, I knew it was a normal company, so I knew it wasn't going to be no trickery. It wasn't going to be no manipulation because it's a normal company. It's a regular company that's been around forever, right? So I knew the Wall Street aliens, it wasn't going to really be much manipulation because it's just a regular company. So when I saw it in the green, I said, this might be an opportunity to pick up a little bit of FCF because it's Walgreens. It's a staple. It's a company that's been around for a long time, and they do what they do very well. It's two big ones in the country, CVS, Walgreens, right? They hit the numbers where they wanted to hit them. They did well on revenue. They beat revenue. They beat EPS. So they beat top line, bottom line. And they were moving in the green before the market opened. I said, oh yeah, I'm gonna ride this wave. Ain't gonna be no trickery because it's a regular company. So when you think, and the only reason I'm saying this, Tracy, is because when you think about market manipulation, when you think about market behavior, you gotta ask yourself, is it a regular company that we've grown to love and trust and it's been around for 100 years? Or is it this fast growing, crazy revenue company? That's when they're gonna trick you on the crazy revenue companies. That's when they'll manipulate and trick you. You'll see one thing and they'll flip it on you. They're not gonna do that with regular companies that've been around forever. Like Walgreens, CVS, some of these other, Walmart. Dumb companies get good earnings report, the stock price going up. Now you notice though, with Walgreens, what did it do? It went from like nine something dollars a share. It got all the way up to 12 on Friday, dipped back down, closed about 11.50, and then this morning sold off a little bit. Now it's back to a regular company again, regular stock price, slow progress stock price. So all I'm telling you is you got to take that in consideration, guys, when you're looking at these companies. If they're fast growing, they're in the tech field, they're in AI, watch yourself. Because that's prime for the Wall Street aliens to manipulate and do market behavior on you. Because they know retail investors are coming in. And what do? They bait us. They bait us and then they dump on us. That's what you see happen to a lot of the quantum computing companies. They baited us. They baited us and then they dumped on us. But guess what? They're going to buy while it's dirt cheap right now and they're going to pump it back up again. So any of you guys got caught in it, just be patient. They will pump it back up again because this is what they do to these fast growing companies or these AI companies because they know a lot of FOMO. All they got to do is create FOMO and then the retail investors are coming. They just need to create FOMO. And they use these artificial intelligence companies. They use this tech. They use that to create FOMO because they know retailers are coming, right? And when they do get it to where they want to get it, they dump it. That doesn't mean anything wrong with the company, but it's artificially inflated. But that's done on purpose. You just got to understand that and know when you've had enough and get your butt out and don't get greedy. But on a normal company, Tracy, all bets are off. If they do well on their earnings report, that stock price in most cases is going to go up unless there's something going on that prevents it. But if it's a normal company like Walgreens or Walmart, Coca-Cola, just normal companies that have been around for 1,000 years, I think the stock price goes up. These fast growing companies, this AI stuff, easily manipulated, right? So that's what I learned from NVIDIA and the whole thing with NVIDIA last year, that it don't matter how much they beat. EPS, how much they beat revenue. It don't matter. What matters is who is manipulating the market to their advantage. Now, long term, NVIDIA does fine. We know that. At least I think I believe that. Long term, it does fine. But that's what I would ask myself, guys, when I'm looking at these companies. Is it a normal company? Or is it one of these hyper crazy future companies that people are making investment in on potential? Because they ain't profitable. They ain't made no money. Now, obviously, NVIDIA has, but I'm talking about some of these little shorts that I'm dealing with. These are all companies that they just came out of the incubator. 5, 6, 7 years ago. Some of them brand new. They just came out the incubator. Talked about IonQ. Just talked about them a few minutes ago. Company started in 2015. Went public in 2021. Just came out of the incubator. So they're going to be easily manipulated. The stock price. So that don't mean we can't make money. We just got to know that. Yeah, this is a little company. Ain't even making no money. How in the world their stock price tripled? It's manipulation. It's FOMO. It's potential. How can a company that doesn't make any money stock price triple? See what I'm saying? You just got to think about that. That's why I tell you guys to go look at the financials and look. If it's red, pretty easy. They ain't making no money. When you look at the revenue, if it's in red, that means they're losing money. If you look at EPS, they're not hitting bottom line. Anything red, they're not doing good. And the number one thing you look at is revenue. If that revenue is red and their stock price is tripling, there's some manipulation going on. But that doesn't mean that's a bad thing. You just need to know that and say to yourself, yeah, there's manipulation going on and there's going to be a dump at some point. I'm not going to be a part of the dump. I'm going to get mine and get out of here. That's why it's called a short. You got to understand this part of the stock market, like I said earlier, is manipulation. It's FOMO. It's enthusiasm. Right? A company not making no money, but the stock price doubles. Come on, guys. Y'all know what's finna happen here. At some point, somebody gonna dump it. So what you gotta do is understand that before you buy it. Okay, this company ain't making no money, but the price going up. Okay, I'm gonna ride this train for $2 a share and then I'm getting out of here. You never dump it on me. I'm getting out of here. I'm gonna ride it for $2 a share and then I'm out. I'm gonna ride it for $3 a share and then I'm out. And then go on to something that you can have more predictability with. That's why I tell you guys, ETFs, 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 ETFs. Why ETFs? Because you got guys like Vanguard and BlackRock and Fidelity and Charles Schwab. These are the guys, they can't outfox them. These Wall Street aliens can't beat them. They can't outfox them. They can't outfox them, right? They got the tools to keep up with these Wall Street. You and I don't. So that's why I tell people, hang your hat on the passive investments where you got professionals and historical history on your side. But when you get into the short game, you become the expert. You better kind of know what you're doing. So hopefully, Tracy, that answered your question. I know I went long-winded on you, but hopefully I did get it answered. So take that in consideration before you buy anything. I don't care if it's pre-market, post-market, earnings report, doesn't matter. I don't care what the earnings report says, if it's a hyperscaler or a hyper-growing company or somebody like NVIDIA. Y'all learned last year, man. These people can beat revenue, they can beat everything, and still the stock price goes down. That's 100% manipulation. That's all that is. But we cannot win that game, right? All we can do on that is it a great company? Is there any business performance? No, I'm going long on these guys, and I know it'll work itself out down the road, right? But on these shorts, they don't have that type of revenue. They don't have that pedigree. Most of these shorts don't even make no money. The only way they survive is they take on investment. But that's okay because they're working on things that could make money. That's where that potential thing comes in. That's why you see the pump. And then all of a sudden, somebody like Jensen Huang comes out and makes one statement, here's the dump. But guess what? They're going to pump it again. So just be patient. It could be an opportunity for some of y'all to pick up some of these quantum computing stocks at $6 a share, $6.50 a share, when they've been up to 20 something a share just within the last 52 weeks. That tells you something. Got to be careful with that, but it could be an opportunity. So don't be afraid of it. Just understand they don't make no money. So obviously at some point there's going to be a dump. Just got to be ready for it, right? All right, let's keep moving. John, good evening, Richard. I made a wrong choice on Friday. I bought Rigetti, very heavy, and now I'm not sure if I should get out now and take big loss or it should wait it out. Your opinion, if you don't mind me asking. John, I just walked you through that, but let me give it to you again. Question 1. A week ago, when Rigetti was trading in the 20s, 19 in the 20s, got itself last Monday, just 1 week ago, guys, this company was trading at $21 and some change. Why do I know that? Because I bought it as a short. I bought it at $19 as a short with the goal of just riding it to $1 and jumping, right? What changed, John? What changed in that company in a week? And this is the thought process, guys, I need us to take ourselves through. See, none of us need to be experts. We just need to use common sense. And John, I'm not saying you're not using common. I'm just trying to, as a whole group, share with you how I go through my process when I'm not an expert. I just use rational. I just use common sense. I just use this thought process. Okay, Richard, a week ago, when this company was trading at 21 a share, now, a week later, it's trading at $6 and some change a share. What happened? Well, that was the dump, right? We know Rigetti is a fairly new company that's doing big things. Got some big partners in there with them doing some big things. We know quantum computing is the future. Now, the future is determined by a lot of different people, right? When that future is going to happen. But we know eventually that's the next step of computing to solve complex problems, right? Quantum computing is at some point. So this company, though, is a good little company. It's a good company. Nothing changed with it, John, right? It just got dumped. There was some inflation in the stock price, true enough. Will it ever get back to 21? I think it will. I think when the right rotation comes around, it will slowly work itself back to where it used to be. I don't have a guarantee for that, but I believe there's nothing materially that happened to the company. I don't think the CEO got fired. I don't think, they lost market share. I don't think they had a bad product rollout, or I don't think any of those things happened in 1 week other than market behavior and people bailed out of the stock, they dumped it heavy, and it just kept falling. The question is, do you believe it'll get back to the glory days from a week ago? I personally believe it will, but that's my personal opinion. You got to come up with what you think. My personal opinion is this. If there's nothing materially changed with the company, yes, there was some hype, but guess what, guys? There's going to be more hype on these companies. I guarantee you they will have more hype on them. They will rotate back in. Somebody going to buy back in, and this thing going to slowly go back up to somewhere in the teens. I don't know if it'll get back in the 20s, but I think it'll be somewhere in the teens. Now, the question is, do you want to be in the single digits and sell out of it and take a huge loss, or are you willing to wait to see it recover, at least to get yourself in the teens and to make the blow a little bit more less? Or let's let it go until you get yourself to the 20s. There's a chance. Could it go to 0? Yes, but I don't think that's likely, John. I mean, what has happened to the company in a week? It's still operating. It's still got its partners. Nothing. Yes, the stock price was inflated. We know this, or at least now we know it. We know these little companies and I don't know everything on Rigetti. Let me just, I'll tell you. Let me go see. Let's go see. I'll tell you right now. I will tell you right now. All right, I'm trying to find if they got the, oh, here we go. It'll be down here. Okay, here we go. So here we go. Let me take a look at this. Here we go. So here's what I'm talking about, guys. So rigidity, September 2024. This is the quarter end, September 2024. Revenue came in at 2.38 million. Year over year, that's a decline in revenue by 23.41%. Net income was a negative 14.83 million. Net profit margin, negative 623.76%. For the last 3 quarters, they've missed on revenue and EPS. So how in the world does the stock price go from, how in the world does the stock price go from 66 cents as a low, 52-week low, 66 cents, 52-week low, all the way up to 21.42, 52-week high, when it don't make no money? Well, I'll tell you how. I'll tell you how. Because of FOMO and optimism, right? So all I'm saying is you have to make a decision on that one, John. But if it was my money, unless I just couldn't sleep and I just needed to get it out and I just needed to, if I'm not comfortable going to zero, if I'm not, you know what I'm saying? Which I don't believe it will go to zero. That's just my opinion now, but I'm no expert here. I personally would stick to for a little bit to see once we rotate back in, once investors start rotating back into these quantum stocks, which they will, because again, guys, I think quantum computing is the future. Now, when is the future is debatable, but I still think it's the future, right? And at some point, there'll be some rotation back into these companies, even though they wasn't profitable. Look, this company wasn't profitable, guys, and they got up to $20-something a share, 52-week high. I mean, within the last 12 months, it's been a $20-something per share. Last Monday, a week ago, it was trading in the $21 a share range with the same financial statistics, making no money. This is what I'm telling you. That don't mean it's a bad thing, because they're working on something that could change the game. They're working with other companies that could change the game, this quantum computing stuff. So y'all know Alphabet came out with Willow, which is a quantum computing chip. So even you got the big boys, you got hyperscalers, mega caps coming out with quantum computing. So it's the future, it's coming, guys. The question is, can you wait? The question is it something that's eating at you and you just need to, you got to make that decision. But if it was me, I would personally wait, because I truly believe there will be a rotation back into these quantum computing stocks. I think it will be. And when that happens, don't know if it'll get to the 20s, but I think it will settle somewhere in the teens. Definitely not in the single digits. They're coming back up to the teens at some point once that rotation comes back in. That's my thought process. So you have to make a decision on that one, John. But if it was Richard Fain and it was my money on the table, I would wait. But that doesn't mean you have to. You gotta, you gotta live with this thing. I think it comes back. I think they get to the teens, and then if we really, really get going, maybe it will briefly get itself back in the 20s or the high teens. I still think I still think quantum computing is the next step, right? It takes what? It just takes one win for these quantum computing companies, guys. It takes one win. It takes one discovery, and it goes metabolic. Think about this, guys. Think about this. Nobody knew NVIDIA, whatever you want to call them. Nobody knew, none of us rather. Most of us retail investors didn't know they even existed until 2023. And look what happened in 1 year. Look what happened in 1 year. They go from $5 billion in revenue, and I believe 2016. In 2016, they had $5 billion in revenue, guys. This is 2016. From 2016 to fiscal year 2024, which is basically 2023, They went from 5 billion to 60 billion in 8 years. They 12x'd. They went from 60 billion, guys, in fiscal 24. They're going to do over 110 to 120 billion in fiscal 25. That's how fast this thing can go, man, if they hit it right. So these companies, listen, that stock price would have never got there unless people thought that this thing had a shot. And I still think it got a shot. I think quantum computing has a really good shot. But just like NVIDIA took off, and I'm not saying any one of them will be NVIDIA, I'm just telling you guys, this is how quick that thing can go. Think about your semiconductors. Think about your semiconductors, AMD, all these guys, all these semiconductors. Nobody knew who they were 2-3 years ago. Nobody. Now look at all of them. All of them approaching $1 trillion market caps. Well, not all of them, but some of them, a couple of them. Broadcom, a couple others. But all of them picking up ground. Why? Because that is the current way you solve complex problems is through these chips. What these quantum computing companies are doing, they're taking it to the next level above what that particular technology is, what NVIDIA has. See, NVIDIA has a current technology, but these guys are going to the next technology. So yeah, it's a ways away, but people love investing in the future. They love investing in potential. So I still think there's growth there. But my point is, these companies don't make no money. Understand when they're jumping, there's always a chance they could fall. And when they fall hard, they fall harder than the big boy companies. Why? Because the big boy companies typically make money, profit, right? Not all of them, but most of them. But when these little bitty companies that don't make no money, and ain't got no history of making any money, and they triple their stock price, you know something's coming at some point. There's going to be a dump. And that's just what happened. But I think they'll come back. So make that decision, John, and hopefully I gave you a little bit of guidance. And I know it's a tough one, but you'll make the right decision. And whatever that decision is, you'll live with it and you'll move on. Okay? Let's move on. Jersey T. Thank you, sir, for all the knowledge, transfer, and daily words. I'm curious to see where you stand on your shorts since all the markets are continuously dropping. I know we eventually will have bounce, but we don't know when that will be. God bless. Well, listen, I got some short positions still out there. I got one in ServPro. I got one in Luminar Technologies. But you know something, guys, you know, my positions, I don't worry about them like that because I know all this stuff is temporary, man. It'll swing back. But I also took a big boy position today for a short, but it's a big boy company because I know until those little companies kind of bounce back, I just stick with the big boys and just make me some FCF off the big boys until I'm ready, until I know a good direction on these little guys. See, right now, these little guys, it's a little tricky. For me, I don't want to guess. I want to see them starting to tick back up and then I'm going to jump back in. Until then, I'll probably just stick with some of the big boys. Like I did today, I took a big position in SMAC, SMCI. It's a big boy company. It's a big boy company. Make money, profitable, big boy company. So I said, okay, let me leave these little ones alone because these Wall Street aliens, and I'm not leaving them alone, but I'm just saying I'm not going to just focus on them every single day. And I may not buy them every single day until some of this volatility works itself out. And if I do buy them, it has to be something that I'm more than positive is going to go in the right direction. If not, then I'm just buying them and holding them. I'd rather just put the money in big boy companies and do that and make some FCF off of them. So that's what I did today. I took a position in Super Microcomputer. It was under $30 a share, like I mentioned earlier, which I have no problem when the rotation comes back in. It'll easily be $35 or $40 a share. Just last week, it got itself up to, what, 38 or something? And ain't nothing going on crazy with Super Microcomputer right now. So for me, it was a good choice. May have to stay in there a week or two. I'm okay with that. But I know when it jumps, when that rotation comes back into these big boys, NVIDIA was down, what, $130 a share, guys? That's crazy. Last week, it was $153. What happened to the company, guys? Nothing. This is easy money if you're patient and you know what you're doing. So you got to know when the shorts to play them, and you got to know when to go to the big boys. Anytime you have a major dip like this and I can buy big boy over these shorts, I'm buying the big boys. Anytime I can get super microcomputer under $30 a share, as long as nothing crazy don't happen with them, you know that company, they'll do something stupid. You go to sleep, wake up, $10 a share. But I don't think that's going to happen. But NVIDIA today, guys, are you kidding me? You could have bought NVIDIA today for $130 a share, guys, and you passed the opportunity up? This is what I'm talking about, though. See, and again, I hate to use the word home run, but come on, guys. It's NVIDIA. You get it at $130 a share. Come on now. You know when the rotation comes back in, it's going up to 140, 150. Now, could it go back down again? Yes. But again, sometimes we just got to say to ourselves, let's go to something that we know is proven. See, I ain't got to worry about buying NVIDIA at 130 and it never coming back to 150 again. See, I don't got to worry because you know it is. Right? The little shorts right now, they're in a down cycle. I prefer to wait till they start coming back up. I'm not going to catch the falling knife. I'm going to let the knife fall, and they're going to start coming back up. And then I'll resume full-time focus on the shorts and leave the big boys alone, other than in the long-term portfolio. I was this close to even buying more NVIDIA today at 130. And then I switched it and said, I'm going to go SMAC, because I just felt like SMAC was going to get a quicker hit than NVIDIA. And remember, SMAC is not long-term, but the short-term for me is under 12 months. It's not day trading. It's under 12 months. I bought SMAC today, and I'm willing to hold SMAC for however long I got to hold it to get me $10 a share out of it. $5 to $10 a share is the game plan with super microcomputer. I bought it under 30, like 29 and a half, something like that. So $5, pulling the parachute cord. So that's the strategy. I said, well, okay, this will be my short, since these shorts down here, they're a little too volatile, a little too crazy. So you got to understand, I'm putting a lot of money in too. So I'm trying to, I'm just trying to be a better steward of the money and switching between. Like I said, super microcomputer is not a long for me. It's a short. It's not a daily short, but it's a short. And I just decided to say, well, okay, don't put the money in these little guys. Put the money in this big guy right here, and then just wait. Put a lot more eggs in this guy instead of a lot of eggs in the little guys. The little guys, once they start moving and we can see some green, we can see some turnaround, we can see some rotation back in, then I'll go back heavy on the shorts. But until then, I'll look at them every day and I'll make a decision, right? So that's what we got to do, right? We got to have our strategy and know our strategy and understand our strategy. And not that you can't make money off the shorts, you can. You can, but you got to really be in tune to it and know what you're doing in this volatile situation right now. You really do. And I don't have that much time all day long to be worried about that. So I just decided the volatility is here, less volatility here. Got a great price on SMAC, right? I got a great price on super microcomputer. In my opinion, over the last several weeks, last month or two, it's been trading in the 30s with a nice little spike up when rotation comes back in, and then a little bit of drop down when rotation leaves. I caught it when rotation was down. When rotation comes back in, which I think it will at some point over the next couple of weeks, I believe it's going to happen next week when you guys there? You guys there? All right, I had a little bit of a hiccup. All right, let me finish this thing up. Let me get out of here. I think I got one more. Ahmad, hey, Richard, so happy to be part of the Wealth Builder family. Seriously, it feels like I've found my people. Quick ones for you. What should we long-term investors do when the market's sleeping off market? Be investing. Always be investing, guys. Especially big boy blue chip paper assets. Always be invested. I don't care if the market's sleeping, awake, at the Bahamas, whatever. Always be buying if you're in the building stage of wealth. Always be buying. but big boy blue chip. And then when time presents itself, if the shorts are in a direction that makes sense and you believe you could make some money and you can kind of be a little bit predictatory, then use the shorts. Leave the shorts alone. If it's unpredictable for you and you can't follow it and you can't, and it don't make no sense, don't buy them. Leave them alone until they make sense. Go back to the big boy long-term strategy. Buy them instead. Don't worry about the shorts right now, guys. If it's unpredictable and you can't get a handle on it, and this thing is so volatile, leave them alone. Go to the longs. Find you a couple of longs. You had one today. The video was on sale for $130 a share, guys. Last week, a week ago, it was $153. That's a $23 per share upside within a few weeks when we get a rotation back in. So that's all I'm saying, guys. We got to just simplify it. Shorts are too erratic. Leave them alone. Go back to the long term. Find you some big boy blue chip long terms that are on sale right now and buy them. That's all you got to do. Let's see here. Besides dreaming of more stocks, let's see here. Oh, and about IonQ Inc. Is it a BBBC 0.2 or just plain dress up as a blue chip? You know, I think right now it's still, I look at it still as a small company, right? Let's see what the market cap is. I look at it as a small company. Let's see here. Let's see what the market cap is. So they're a $6 billion company. Right? Let's see if they're making any money. Quarter ending September 2024, they made $12.4 million, which is a 102% increase year over year. Cha-ching. Bad news is net income was $52.5 million negative. That's not a cha-ching. So they made some revenue, but they lost way more than they made, right? So when you look at net income was negative 52. So they spent more than they made. But this is the problem with these little companies, right? But that don't mean it's a bad company. They're developing technology. Guess who some of their clients are they're working with? 3 of the major hyperscalers. Microsoft Azure, I think that's how you call it. Microsoft Azure, Google Cloud, and Amazon AWS. They're using their technology, their quantum computing technology in those hyperscalers. So decent company, guys. It doesn't mean the company is bad. It's just they ain't making no money. So what do you got in here? You got potential. So for me, no, it ain't a big boy. It ain't a big boy till you make money and make net profit and pass something to the shareholders. No, it's not a big boy. That's my opinion, right? But that don't mean I'm not gonna make money off of it when things settle down and the shorts make sense and I can see a clear path to green, then I'm back on them. But right now, ain't no clear path to green in these shorts. There's no clear path to green right now. Until that volatility settles out a little bit like it was last week, there was a clear path to green last week. Easy money, clear path. Now the path is very, very dark. Very dark. So shorts, pump the brakes unless you know what you're doing and you feel comfortable with it. For me, I'm gonna pump the brakes and I'm gonna concentrate on big boys. Take some of these big boys short term like I did today. And now instead of me worrying about it every day, I'm gonna take a pause. I made my big boy investment. Let me let that materialize. And then when these shorts rotation back into them and they start making sense again and making some improvement in the stock price, I don't need to be buying them and to hold them for 2 years. I don't want that. When I buy them, I just want to buy them, they go up $1 and I get out. I don't want to buy them and wait 6 months till they go up. I'd rather just put my money in the video if I'm gonna do that. I'd rather just put my money in something that's proven if I'm gonna do, you know what I'm saying? Now, that don't mean I don't get caught in them and I don't wait if it makes sense. But right now, to me, it don't make sense buying them because there is no clear path to making no money right now. The whole point of shorts is to make money. So until there's a clear path to making money from the stock price, I'll just go ahead and concentrate on some of the bigger companies that I know have a better potential of bouncing back than, say, some of the quantum computing companies. It may take them a while to bounce back. It depends on how much FOMO comes back in and how much potential comes back in to pump up the price. Because we already clearly see they don't make no money. So they don't need to wait on no earnings report to pump them up because they don't make no money. So it has to be FOMO. It has to be potential investing, right? Investing on potential. So we need to see that come back, and I don't know when that's going to come back. I think it'll come back this year, but I don't know when. So hopefully that answered your question. Well, all right, guys, I'm going to get on out of here. It's getting late. I know I'm pretty doggone sure. I missed some of y'all questions. But I got to get out of here. Okay, one last little check before I press the button, the end button. Let me see if I got anything else in because I got a few minutes. I'm way past the 9:30, but I am every week, and I'm okay with that. I ain't got nothing to do but take a shower and go to bed. That's it. So I ain't got nothing else to do. Let's see here. Sylvia, Mr. Fane. I wish to be, what? Oh, okay. Hey, Mr. Fane, I wish to be ready. I'd like to have your help, any guidance. All the best to you and you and everyone in the team. Sylvia, you got to send me a DM. Send me a DM on Patreon. All right? Send me a DM on Patreon and we'll talk about it. But I'm gonna need you, when you send me that DM, I'm gonna ask you some questions, and I need you to think about these questions and get answers to them. And then we'll be able to talk about your situation and try to get you on a pathway, right? But you got to take the steps. You have to take control of your own financial destiny. You got to take control of your own financial freedom. And that means you got to initiate contacting me through direct message. And then we will get you a plan together. John, good evening, Mr. Fane. Thanks for your insight and helping me understand the market and, more importantly, market manipulation. I have purchased Serve Robotics as a long. I think the company will be more valuable in 10 years versus today. Do you have a Serve as a long or you keep it as a short? It's a short for me. Again, don't no mean Serve won't be a monster because you know NVIDIA bought 10% of the company or at least 10% of the outstanding shares. NVIDIA bought them, so they believe in it. I believe in it. See, they closed today at 1478, but after market, they got all the way up to 1590. See what I'm saying, guys? See what I'm saying? This is what I'm trying to tell y'all. See, this thing closed at 1478 today, and after market, now it has worked itself back up to 1590, almost $16 a share. Just like that. Who knows what will happen tomorrow morning? So, but let's look at some numbers on Serve. Let's see what Serve is doing. Revenue, $221,000, up 254% year over year. Net income, -$8 million. See where I'm going? Ain't making no money. But that doesn't mean it's not a company with great technology and at any point can hit it. So I think Serve is a good company. It's a small company. I think a company like NVIDIA sees the potential in some of their technology. And that's the reason NVIDIA bought 10% of the outstanding shares. They bought 3.7 million shares of Serve Robotics. They only have 3.37 million outstanding. NVIDIA bought 10% of that. Took FCF and bought 10% of the company. For a reason, guys. There's a reason Uber is buying shares left and right. There's a reason. It's technology, guys. See, all of these companies we're talking about who are making no money have technology. And that technology, all of them won't win, but some of them are going to win with that technology, guys. And Serve Robotics is one of them, right? But I got it as a short. Until they make money, this is the way I look at it, guys. Until they make money, until they have net income, top line revenue, bottom line profitability, they can't be a long in my book. They'll be a short, and I'll root them on. And when they become profitable, then potential. But I don't want no companies in my portfolio long-term that ain't profitable. I'm sorry. I got to get to where I got to get to in 9 years. These people may not be profitable for another 9 years. Why would I put, not long-term. So short-term, yes, but not long-term. Not until they make money. They've got to be profitable and show a consistent track record of profitability. Then they can be potential along. But no companies losing money can be in my long-term portfolio. Right? I ain't got many years left, guys. I gotta get my time is done in 9 years. So I gotta be only focused on companies that are profitable right now. Right? And I'm not saying Serve won't be, it just ain't today. So they're short. Blaine Booker, another great session. Thanks, Coach. Big Boy Blue Chip. Thank you, Blaine. I appreciate you rocking with me, man, and sticking around. I really do. I really appreciate you, man. So keep rocking with me. I'm gonna keep committing to putting out this content every day. I'm gonna stay committed to this financial community. I'm gonna stay committed to helping everybody that won't help. If you want help, DM me. If you want help, get in that community chat and let people know you need help. That's the commitment level you guys got to have if you want to be prepared, be ready. Remember, I told you, many people are not ready for what's coming. They're not going to be ready. Please don't be one of those people that ain't ready. Please don't be one of those people. There's no reason you should if you're in this wealth community. If you're in this financial community, you should be prepared because you got a lot of resources here. Please use them. Please use them. Please use the resources in this financial community. You got 1,200 people in here. Please use them as resources. Please use me as a resource. Please use my YouTube channel as a resource. That's where all the teaching is done. At least according to my opinion. That's where it's at. Every day, I'm there every day. If you really want to transfer wealth to yourself, put that as a priority. At some point in your day, check out the videos. That should be one of your top financial priorities, guys. Or why would you be here? Okay? All right, guys, that's it. We're going to get on out of here. I know I got some more in here, but I'm not going to be able to get to all the rest of them. I think I got to all of them. I think the last one I'll do, and I believe this is going to be... let me see here. Can you narrow down the two shorts with... Oh, so Karen, I'm going to do two more. Karen and then D Fortune, and that's it. So let's move on to Karen real quick. Hey, hello, Richard. I want to thank you again for all the information that you share with us. I have not participated in the lives lately, but I am back. You have been a blessing for many of us. I have been doing long-term investing per your wealth builder plans, but I am a little skeptical about the shorts. However, I keep thinking that one or two of these shorts could be another NVIDIA better. Can you narrow down to two best shorts with potential high growth? I know I need to do my own homework. Any advice? In my opinion, Karen, number one on that list is Rocket Lab. Rocket Lab gonna be a monster company. That's my opinion, guys. They're gonna be a monster company. That's my opinion. So if I had one short to focus on, it would certainly be Rocket Lab. Let me see what else we got in here. If I can give you another one that I think other than Rocket Lab. Again, Rocket Lab is in my opinion the one that's next. I think Rocket Lab is next in my opinion. Anybody else on here that I think has a potential? I think SoundHound AI is another one. If I had to pick two, I'd go with Rocket Lab and SoundHound AI. Those would be my two that make the jump. Definitely Rocket Lab in my opinion. Again, I'm not an expert here. I'm just giving you my opinion, Karen, but I think Rocket Lab, my goodness, I think Rocket Lab is on to something. And I think SoundHound is on to something as well. Even though the stock price is down, we know it's down, but it's on to something. And if I had to pick a quantum computing company right now that I think has the chance, it'd have to be IonQ. I think IonQ is going to be ahead of Rigidity and QUBT. What's that? Quantum something. I think it'll be. I think IonQ for quantum computing. Keep an eye on. So those would be my three for you, Karen. But definitely, if I could only pick one right now out of my shorts, it'd have to be Rocket Lab, no doubt. All the things that I see them doing in the aerospace industry. Changing the guard from the old guard to the new guard. I think there's some opportunity there as they continue to pick up contracts from NASA and whoever else. I think they'll continue to grow. They continue to take on investment. Again, they're not no big company yet, but they're getting there. I think they're on to something. And I think the market is getting ready for a change, a shift when it comes to space and how people get to space and this reusable rocket ship concept, I think is one that'll catch on. So that's that one. Okay, last one. We got Karen out. Hopefully, Karen, that answered your question. Rocket Lab, and then SoundHound, and then if you're looking at quantum computing companies, none of them making no money right now, but I like IonQ would be my favorite. All right, D Fortune. Hello, Richard and Wealth Builders family. Good evening. My question is, how might changes to trade agreements or tariffs under the new administration affect key sectors like technology and manufacturing? I think short term it could, but long term it won't. I don't think there's going to be. I think the tariff threat is a negotiating tool that I think the incoming president is using. I don't think there is going to be. Again, guys, the stock market is 55 trillion. That's the market cap. A lot of that market cap right now is taken up by technology. A lot of it is being taken up by hyperscalers, mega caps, semiconductors. I don't know. That's a big part of your stock market value to just throw it in the trash. So I think it's they'll figure that out, but I don't believe the 1% will allow anything to affect the stock market. So could there be a short-term wobble? Yes. But long-term, no. No. You can't stop the future. You can't stop progress. I don't care who's sitting in the White House seat. Can't do it. I don't care who's sitting in the Oval Office. You cannot stop progress, and nobody is going to let the stock market get destroyed. Nobody, they're not going to let that happen. Not when they can control it. Now, if something uncontrollable like a pandemic happens or a war happens, then temporarily all bets are off, but I don't see tariffs doing any of that stuff. I just don't see any of that really materializing. Can you do it in a little bit here and there? Sure, but again, guys, the American people pay for these tariffs, man. So if that's my opinion. The American people pay for it because the buck is going to be passed on to you. Any cost on your widgets from Walmart or Target or your cars or any of that stuff, these manufacturers are going to pass that on to you and me. So I don't think so, D Fortune. Now, like I said, could a short-term blip? Maybe. Long-term, I just don't think you stop this train, and it's a continuous bull market. We've been through these tariffs before. We've been through other things before. And what have we done? Always came back stronger. Stock market always comes back stronger. This won't be no different. So is it on the radar? Yes. Am I worried about it? No. And if it does happen temporary, I just buy the dip. I just buy the dip and wait. All right, guys. Appreciate y'all. I'm out of here. Thank y'all for being such great partners. Thank y'all for being part of this financial community. Thank y'all for allowing me to have a small piece of your time. I hope this information that I'm giving you will be impactful. It will be financial life-changing. Certainly use me as a resource. Number one resource that you can use of mine is my YouTube channel. Please, guys, plug in on a daily basis. Please check out the content. Support me just like I support you. And anything you need from me, y'all know how to reach me. Just DM me here on Patreon and I'm there. I'm not going to let you down. I'm there. I'm not, I may disagree with you. We may not have the same pathway, but I'm still going to be there to support you because you support me. So appreciate y'all, man, for rocking with me. And I'm going to see you guys next Monday on the next live stream. Even though it might be a holiday, we still going to have a live stream on Monday, every Monday, unless I'm not here. Other than that, I'm going to be on here on these Mondays. So I look forward to helping you guys. Well, all right, man, I'm going to get on out of here. Y'all take care. I will see you guys on the YouTube channel, and I will see you guys in the community chat. So thank you for all and everything you do. Y'all stay good. Continue to have a great week. Don't let any of these opportunities pass you by. Get on them right now. Don't let them pass you by. This volatility will be changing. Tide will be shifting. Just be patient. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. When life smiles at you, don't be afraid to smile back. Peace.